And before we get up out of here, you know we gotta talk about them earnings. So I only got two earnings updates for y'all for this week. The first one is Target, or as most people like to call it, Tarjay. They had an amazing earnings. We finally know where everybody was spending their stimulus checks last year. Target had an increase in earnings more than they've had in the last 11 years combined. Revenues hit $93.6 billion, a 20% increase year over year. And so now the question is, can Target repeat the feat, or was this just a coronavirus pandemic driven increase in revenue? The plan is they're going to try and do it. They're definitely going to try and do it. They plan to spend about $4 billion to ensure that they're improving on processes, especially with online sales and delivery. The stock dropped about 5% because stock investors are like babies. They want everything right now. Why are you using the money for other stuff? Give us some dividends. Target, much like Walmart, is literally one of the few stores and one of the few industries that can actually challenge Amazon. With about 1,900 stores worldwide, Target is able to counteract the fact that Amazon only has I think 400 to maybe 800 warehouses in the country. So Walmart has about 5,000 stores, and Walmart has used that to its advantage to be able to offer same-day delivery, and Target is trying to push on that same button. And so far it was able to do it last year. Let's see if they're going to continue to be able to do it moving into the future. The other company that I wanted to talk to you guys about when it comes to earnings calls was Lemonade. I actually did an entire breakdown of Lemonade's revenue and earnings call and everything that they said on the earnings call on my YouTube page. So if you want to go check that out, go check that out. However, the stock has fallen 12% since earnings. Actually, it's probably more than that now. It's fallen an additional, I think, 8% today. So it's falling 20% since the earnings. And that's just because the forward guidance that they gave was a lot more neutered, because they were like, yo, we're not going to make that much money this year. And people were like, what? And then they started selling off out of it. I think this is going to be a consistent thing that we're going to see for the rest of this year, where a lot of stock fall as companies come out and say, yeah, this is our guidance for what we expect. We don't expect to make as much money as we did last year, or even better yet, they just come out and give reality. They set reality back into the stock market, and we will continue to see a sell-off. We saw a sell-off today. We're probably going to keep seeing a sell-off for a while because the stock market has been very bubblicious. There's been a lot of companies up there that has been very much overhyped. And now the final segment of the day is going to be a rant. I hope you enjoyed that little snippet of the Rambling Mind podcast. If you want more of the Rambling Mind podcast, or if you want to listen to the whole episode that you just heard, go check it out on any podcast listening platform, whether that be Anchor, Spotify, Google Podcast, Apple Podcasts, Breaker, Stitcher. I could go on, but you guys already know which podcast you love to use to listen to. So go check it out. Link down in the description as well. I'm gonna catch y'all later. Peace.